You wake at 2:17 a.m. to the cold light of a screen and a number you swore you'd never see again. No ping from friends, no email from work, just a chart that looks like a staircase ripped out of a wall. Your exchange app blinks temporarily unavailable. Your thumb refreshes out of habit, not hope. The last time you checked, the market was inching higher. Confidence humming like a refrigerator in the next room. Now there's a single candle that swallowed a week of green in one breath. Your mind reaches for a story to make the picture safe, a leak, a law, a leader's quote, a reason that feels like a culprit. But the thing in your chest already knows the answer you don't want to hear. This isn't a story about news. It's a story about plumbing. You tell yourself to stay calm. It's just a wick. It'll bounce. It always does. You stare at the number and it stares back. The levels you drew yesterday look flimsy, like chalk on wet pavement. You promised you'd be disciplined. You promised you wouldn't fight a machine with feelings. You promised you wouldn't be the person who clicks sell at the exact moment a liquidation engine finishes its work. Promises sound impressive when the screen is still. You go hunting for headlines. There's a rumor about a wallet transfer. A chart of ETF flows with a red arrow and no context. A quote from a regulator without a link. A miner address moving coins to a known exchange. A thread claiming a hack in a language you don't read. None of it explains a 5-minute vertical. All of it gives permission to panic or to gloat. It dawns on you that if there was one clean explanation, your app would be stable and your heart rate would not be in your throat. The reason you raise shaking isn't that the world changed at 2:17. It is that the market remembered how your position is funded. The part nobody teaches in victory posts is that depth is a living thing, on holidays, on weekends, at awkward handoffs, between time zones. Market makers quote thinner, spreads widen a touch, the top of book is a puddle, and the 1% depth is a kiddie pool. A gentle shove can move a lot of pixels. Now layer on weeks of one-sided positioning, positive funding that stayed positive, open interest that pumped without a corresponding surge in spot volume, social feeds chanting the same hymn, new cycle, new flows, new era. When everyone leans the same way, the market doesn't need a villain. It needs a nudge. Picture a domino line to close together. Any rumor can be the finger. A program trade bites through the first 2 levels of bids and prints under a round number. Where retail and algos park their stops, that tick is not huge in size. It's huge in location. Stops become market orders. Market orders greet a thin book. The thin book becomes air. What you're watching isn't fear. Not yet. You're watching forced selling kick the door in and then hold it open for itself. Perpetual swaps feel like spot to the hand, but not to the math. They're leveraged with a heartbeat. Funding is the rent longs pay shorts when the crowd is leaning right. When that rent runs rich and green for days. 2 things are true at the same time. Longs are subsidizing shorts to stay in the game, and longs are confident enough to pay to keep leaning. Liquidation levels cluster where humans like to put them, under obvious lows. Under yesterday's VWAP, under the number with 2 zeros. Market makers and quants see those clusters like city lights from a plane. If price snakes near one of those neighborhoods in a thin R, forced sellers do the rest. You glance at open interest and do the math you promised to do before clicking anything. If price gushes and OI flushes, positions are leaving the table. That's not people selling because of a headline. That's code selling people. If price drops and OI rises, new shorts are piling on, and the script is different. You check funding. It was a steady hum on the long side. It just snapped toward flat. That's the sound of rent turning into eviction. You pull up an aggregated liquidation feed. 9 figures in an hour. It's not a story. It's plumbing backed up all at once. Options join the party exactly when you love them to take the night off. Dealers who sold calls and puts hedge their exposure by buying or selling the underlying. When they are long gamma, they sue the path buying dips, selling rips. When they are short gamma, they chase. A small down move forces them to sell to stay hedged, which pushes price down, which forces them to sell more. If you were long gamma tonight, you'd be catching the knife with both hands and a grin. If you were short, you're a mirror held up to panic. You want technology to save you. But on-chain is honest, not merciful. Oracle's lag half a step behind reality. That's enough for liquidators to make a week's profit in an hour. Gas fees spike as every borrower tries to top up collateral at the same time. Those with a plan pay first. Those with a plan in their head pay later. Automated market makers politely honor their invariant, XY equals K, while the human at the screen screams unfair if a pull gets drained on one side. Price impact explodes in your face. Somewhere, a fringe pair prints a number that looks like a typo. Tomorrow it will be a thumbnail on a video with flames. No one needs to press a big red button to make this timeline real. A market maker widens a spread one tick because risk lights went orange. A basis fund that lived off positive funding watches the spread collapse and pulls balance. Miner sells extra to cover power after difficulty jumped. Someone else sees that wallet transfer and screams dump. An ETF desk slows primary creation because the hedge looks weird for 5 minutes. A lender tightens terms because VAR says today's yesterday is now due months ago. None of these are conspiracies. They are reasonable reactions that add up to no bids just when the market needs a favor. There's a reason crashes love nights and weekends. When traditional desks sleep, leverage's shadow gets taller. If you never changed your sizing between Tuesday noon and Sunday dawn, you weren't conservative. You were forgetful. Momentum's story about itself is loudest at brunch. Microstructure's truth about you is loudest when the room is empty. You keep hoping for an adult to enter the frame and nod. It'll be fine. It's a shakeout. Nothing has changed. But the wise thing about shakeouts is that they change exactly what needed changing. They clear the crowd at a speed that no meeting or memo could accomplish. They reset funding. They burn out the fuel that made trading feel like a ride you couldn't lose. The unfair thing about shakeouts is that they pick victims who learned their risk management on a sunny day. You remember saying you didn't care about short-term noise. That long-term plan sounded noble before a candle erased last week's dignity. The truth is that even holders have to short-term problems. Tonight, custody and conviction. If your coins live where everyone else keeps their coins, your calm can turn into a ticket number. If your thesis can be assassinated by a single move, you didn't have a thesis. You had a wish you dressed in rational language. It helps to narrate the night in a way you can test. In the first 10 minutes, the program trade bit through the top of book and tagged a level everyone saw. In the next 10, stops cascaded and perps lit up. In the next 20, options dealers chased delta and IV exploded. In the next 30, on-chain liquidations began, gas spiked, and AMMs did their job so perfectly it looked like cruelty. In the next 30 after that, exchanges toggled cancel only, and stablecoins traded at odd premiums and discounts across venues. After 2 hours, the angle softened, not because a hero arrived, but because forced sellers emptied their clip. Tomorrow the story will have names. Tonight the mechanics made the plot. You can try to buy the bottom like a legend, but bottoms are not numbers. They are processes. If open interest stops collapsing and stabilizes, if aggregated liquidations roll over from vertical to flat, if front-month implied volatility peaks and curls, if dealer gamma shifts toward neutral, if top-of-book depth rebuilds, if stablecoin premiums tighten across venues, if exchange feeds go quiet instead of frantic, then the worst of the machine is likely done. If none of that is true, your screenshot of courage will be a receipt for slippage. There are myths that drain accounts faster than a wick. The first is that manipulation is the only reason price can move like this. Markets are always manipulated in the boring sense. Liquidity is a service, and providers are allowed to price it. When it's dangerous to stand in front of a train, they step aside. The second myth is that better tech would stop this. Faster oracles carry wrong prices faster. Deeper derivatives give dealers more gamma to shed. Every version of progress moves risk around. None makes it disappear. The third is that a great headline will stop a mechanical cascade. Headlines excite you. Liquidation engines don't read. You can be a pessimist about nights like this, or you can be a student. The student builds a dashboard that speaks the machine's language, open interest delta hourly, liquidations funding and its direction of change, front month 4 and skew top of book depth and 1% depth net exchange flow stablecoin premiums. By venue oracle update intervals gas price regimes. The student writes down where their positions begin to sell them and vows never to rely on memory. At midnight, the student decides what no trade means before the app blinks red. You might think this is all overkill. You might say you just want to buy and hold. Fair. Then the rule is simpler. Hold in places that survive outages use custody. That doesn't tie your time horizon to someone else's queue and don't watch the 1-minute chart in the middle of the night unless you want to act like a 1-minute trader. The market can't take long-term conviction from you unless you hand it over for a thrill. There's a checklist that fits on one screen that beats bravado every time. If price falls and OI flushes, respect the cascade. If funding snaps from rich positive toward flat, stop telling yourself you're being paid to be right. You're paying. If liquidations are printing 9 figures an hour, Recognize the seller isn't a person you can argue with. If foreign skew explode, know that hedges are amplifying, not soothing. If order book depth is a rumor, use resting orders far away or do nothing. If stablecoin premiums are gapping across rails, execution risk is the trade, not a detail. If gas is on fire, collateral management is a cue, not a button. Everyone wants an enemy to blame, a rogue whale or a malicious exchange. There are nights when someone does something ugly. Most of the pain in your P and L did not come from a mastermind. It came from how your plan intersected with a structure that does not care about your opinions. If you need a villain you can control, make it leverage without a stop. Make it stops where everyone else places theirs. Make it size that assumes the next R will look like the last month. Those are villains you can fire. The aftermath has its own traps. You'll read posts in the morning that make last night sound like destiny. You'll meet people who bought the low and sold the high and did it all on purpose. You'll write a sentence about how you stuck to your plan, and then you'll either stick to it or you won T. If you got hurt, the only repayment you can force from the market is the information you failed to collect the first time. If you came out intact, don't confuse luck with design. Turn luck into rules before it turns into arrogance. If you want a ritual that beats refreshing, choose 3 prices you'd be proud to own for a year and place bids the size of sanity. Promise yourself you won't move them under duress. Decide a daily P and L limit that ends your participation automatically. Decide what it means for funding to be deposited for you to add risk and stick to it. Decide that Sunday sizing is not Tuesday sizing. Decide that if your hands shake, your only trade is to reduce complexity, not increase it. There's a gentleness hidden in hard lessons. The same cascade that erased the weakest euphoria gave you a tour of how the machine behaves when it doesn't care what you think. It told you, in a language you can learn, where your edges are imaginary and where they're real. It reminded you that you don't need to guess who pulled the plug when you can measure whether the plug was connected to anything in the first place. It showed you that the people who sleep on nights like this aren't brave. They already did their work. If you need closure, write a story for yourself. The story starts with you watching a number you hate. It moves through you checking OI, liquidations, funding, volume, depth. It includes you doing nothing at least once. It ends with your account balance slightly smaller or slightly larger, but with your rules more solid than your fears. That is not cinematic. It is how professionals turn nights that ruin other people into ordinary hours. You don't need to become a quant to survive. You need to accept that the market is not a conversation. It's a clearance system that sometimes replaces people with code. News matters, but leverage writes the script. Rumors matter, but depth decides how loud they sound. Confidence matters, but margin calls speak last. The question that saves you money is never who did this to me. It's what is the structure right now, and where's my foot on it? There will be another to 17 a.m. There will be another wick that makes a month's work look small. Before that night arrives, put your plan where your hands can see it. Put your pride where it can't reach the keyboard. Put your position sizing on a weekday diet when the market starves for bids. If you choose to watch, watch like an engineer. If you choose to sleep, sleep like a person who trusts the person they were at noon. And when the screen turns red again and your app asks you to wait, you'll do the one thing panic can't stand. You'll check a list. You'll read the plumbing. You'll decide with numbers. You'll act only as fast as your rules, not your fear. The night will feel shorter. The damage will feel smaller. The question that once made you freeze will shrink into a checklist you can do in the dark. That's not luck. That is how you stop being the last person to learn what the market taught all of us 1,000 times before you opened your eyes.